Picture this. While everyone's eyes are glued to gold hitting new all-time highs, a select group of savvy investors are quietly accumulating massive positions in silver. And they're doing it right now before we enter 2026. What do they know that you don't? In the next 10 minutes, I'm going to reveal why some of the world's sharpest financial minds are making their moves in the silver market today, and why waiting even a few months could mean missing out on what could be the biggest wealth transfer opportunity of this decade. Stay with me, because by the end of this video, you'll understand exactly why silver might be your smartest investment move right now. Let's start by addressing the elephant in the room. Silver has always lived in gold's shadow. For decades, it's been the overlooked little brother of precious metals. But here's what most people don't realize. Throughout history, every single time we've seen major monetary shifts, economic uncertainty, or industrial revolutions, silver has dramatically outperformed gold on a percentage basis. We're talking about gains that have left gold in the dust, and right now, we're standing at the convergence of three massive trends that are about to make silver absolutely explode in value. The first trend is something called the gold to silver ratio, and this is critical for you to understand. This ratio tells us how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged around 50 to 1. That means 50 ounces of silver equals 1 ounce of gold. But here's where it gets interesting. Right now, that ratio is sitting at levels that scream opportunity. When this ratio gets too high, history shows us that silver eventually catches up with a vengeance. We saw this in 1979 when silver rocketed from $5 to $50 an ounce in just a few months. We saw it again in 2011 when silver surged from $15 to nearly $50. Each time, the gold to silver ratio was out of whack, and each time, silver corrected violently to the upside. Smart investors recognize we're in a similar setup right now, but the gold to silver ratio is just the beginning. Let's talk about something that's fundamentally changing the silver market in ways we've never seen before: the green energy revolution. You've probably heard about electric vehicles, solar panels, and renewable energy. But what you might not know is that silver is absolutely essential to all of these technologies. Every single solar panel requires about 20 grams of silver. Electric vehicles use 2 to 3 times more silver than traditional cars. 5G infrastructure, loaded with silver. The electronics in your smartphone, your computer, your smart home devices, all require silver because it's the most conductive metal on Earth. Nothing conducts electricity better than silver, which makes it irreplaceable in our increasingly electrified world. Now here's where this gets really exciting. Global governments have committed trillions of dollars to green energy initiatives. The United States, the European Union, China, and dozens of other countries have set aggressive targets for renewable energy adoption. The International Energy Agency estimates that we'll need to install more solar capacity in the next 10 years than we have installed in the entire history of solar power. Think about that. More solar panels in the next decade than in all of human history combined. Each one of those panels needs silver. The demand is about to go parabolic, and here's the kicker. We're already facing a supply deficit. For the third consecutive year, the silver market is in deficit. That means we're consuming more silver than we're mining. The Silver Institute reported that industrial demand alone consumed over 600 million ounces last year, while total mine production was just 800 million ounces. When you add in investment demand and jewelry fabrication, we're pulling from existing stockpiles just to meet current needs. And remember, this is before the green energy boom really takes off. We're already running a deficit in what could be considered the calm before the storm. Let's talk about mining for a moment, because this is crucial to understanding why silver prices have nowhere to go but up. Unlike gold, most silver isn't mined from primary silver mines. About 70% of silver is actually a byproduct of mining other metals like copper, lead, and zinc. This means that even if silver prices double or triple, we can't just open more silver mines to increase supply quickly. The supply is constrained by the economics of these other metals. It takes anywhere from 7 to 10 years to bring a new mine online, and most of the world's easy-to-access silver deposits have already been exploited. We're not going to see a supply surge to meet the coming demand tsunami. Now let's discuss what central banks are doing, because this is where things get really interesting. For the past few years, central banks around the world have been buying gold at record levels. They're diversifying away from dollar-denominated assets and building their precious metals reserves. But here's what's starting to happen. Some forward-thinking institutions are beginning to look at silver as well. Why? Because silver offers them industrial hedge properties that gold doesn't. It's both a precious metal and an industrial commodity. As these institutions start allocating even a tiny percentage of their reserves to silver, the impact on the relatively small silver market will be enormous. The entire global silver market is worth roughly $1 trillion. For context, Apple's market cap alone is over $3 trillion. A small shift in institutional allocation could move the silver market massively. Speaking of institutions, let's talk about what's happening with the big players right now. Billionaire investors and major hedge funds have been steadily accumulating silver positions. These aren't retail investors buying a few coins. These are sophisticated players with teams of analysts who've done deep dives into supply and demand fundamentals. They're looking at the same data we're discussing and drawing the same conclusions. When you see this level of smart money moving into a sector, you need to pay attention. These investors don't make moves based on hype or emotion. They follow the data, and the data is screaming that silver is undervalued relative to its future demand. There's also a monetary component to this story that we can't ignore. Inflation has been a persistent concern, and despite what official numbers might tell you, most people feel the pinch in their everyday expenses. Throughout human history, silver has been money. It was used as currency for thousands of years. Even the word money, in many languages, derives from words related to silver. When people lose faith in fiat currencies, they historically turn to precious metals. We're seeing signs of this already with gold breaking records. But silver, being more affordable and accessible to average investors, could see even more dramatic inflows as people look for ways to preserve their purchasing power. Let me give you a practical example of what this could mean. Imagine you invested $10,000 in silver today. If silver simply returns to its inflation-adjusted all-time high from 1980, we're looking at prices north of $150 per ounce. From current levels around $25, that's a six-fold return. Your $10,000 becomes $60,000. But here's the thing. The industrial demand picture today is exponentially stronger than it was in 1980. We didn't have solar panels, electric vehicles, 5G networks, or the massive electronics industry we have now. The bull case for silver today is actually stronger than it was during its previous major runs. Now, I know what some of you are thinking. If silver is such a great opportunity, why isn't everyone talking about it? This is actually one of the most bullish signals. Silver is still under the radar for most mainstream investors. It's not making headlines. Financial advisors aren't pushing it. This means we're still early. By the time silver is front page news and your neighbor is talking about it at barbecues, the easy money will already have been made. The smart investors who are buying now before 2026 are positioning themselves ahead of the crowd. Let's also address the practical aspects of investing in silver. Unlike stocks or bonds, physical silver is a tangible asset you can hold in your hand. It's not subject to counterparty risk. If the financial system faces stress, your silver doesn't depend on any company's solvency or any government's promises. You can buy physical silver in the form of coins or bars, and many investors are doing exactly that. There are also silver ETFs and mining stocks for those who prefer paper assets, though physical ownership has distinct advantages in terms of security and independence. The timing of this opportunity is critical. We're approaching 2026, and several catalysts are converging. Major infrastructure bills are being implemented, green energy mandates are kicking into higher gear, the supply deficit is widening. And perhaps most importantly, the broader public hasn't caught on yet. This window won't stay open forever. Once silver starts moving, it tends to move fast. The metal's relatively small market size means it can be volatile, and that volatility works both ways. When sentiment shifts and capital starts flowing in, prices can gap up quickly. Consider also the geopolitical dimension. We're living in an increasingly uncertain world. Trade tensions, regional conflicts, and economic competition between major powers create an environment where hard assets become more attractive. Silver serves as both an industrial metal critical to technological competition and a monetary metal that provides security. This dual nature makes it uniquely positioned for the current global landscape. For those concerned about market timing, here's an important perspective. Trying to catch the absolute bottom is a fool's errand. What matters is positioning yourself before the major move. If you're waiting for silver to drop to $15 before buying, you might wait forever, and meanwhile, miss a move to $50 or $75. The investors who make life-changing returns aren't the ones who perfectly time the bottom. They're the ones who recognize a major trend early and position themselves accordingly. So what should you do with this information? First, do your own research. Look at the supply and demand fundamentals. Examine the industrial trends in green energy and electronics. Study the historical price patterns and ratio relationships. Second, consider your personal financial situation and determine what allocation makes sense for you. Many financial experts suggest that 5 to 10% of a portfolio in precious metals provides good diversification without excessive concentration. Third, if you decide silver makes sense for your situation, start building your position methodically. You don't need to go all in at once. Dollar cost averaging into silver over several months can smooth out short-term price fluctuations. The bottom line is this: we're standing at a unique moment in the silver market. The industrial demand curve is bending sharply upward just as supply constraints are tightening. The monetary environment favors hard assets. The smart money is accumulating positions. And we're still early enough that the mainstream hasn't caught on. This combination doesn't come around often. The investors who recognize this opportunity and act before 2026 could be positioning themselves for substantial wealth creation. Those who wait might find themselves chasing a market that's already made its big move. The choice is yours, but the clock is ticking and the smart investors have already started making their moves. Don't let this opportunity pass you by.